Welcome back. Now let's turn our attention to the primary market. Room air conditioner and small domestic appliance manufacturer Epack Durable's IPO opens today. They've set a price band between 280 to 230 rupees, and the company is looking to raise 640 crore. Of that, 400 crore will be a fresh issue and 240 crore will be an offer for sale, where promoters and two of their investors will be reducing their stake in the company. Ajay, Singhania, the managing director and CEO of the company, and we have Mr. Bajrang Bothra, chairman and whole-time director of Epack Durables, with us on the show. Gentlemen, thank you very much for speaking with us. So first, about this money that you're raising, 400 crore rupees. Part of it is going to be used to increase your capacity. And your capacity is going up substantially from 3.7 million tons. You're adding 2.4 million tons. So that's over a 50% capacity increase. So that's quite substantial, a 50% capex increase. Why is that? Is it that you're operating at full capacity, or you have the visibility that you need to add on to your capacity?
So, Reema, the way Indian air conditioning sector is growing, we are going to double. As in country, the requirement is going to double up in next 4 to 5 years, and hence the capacity needs to be doubled. Since the ODM market share is also increasing, we foresee that we need to almost double up the capacity. So, like we were sharing last time, current year, 2023, December, we added almost 50% capacity. From 2.4 to 3.7 is our current capacity. So, we already added a 50% capacity this year, and going forward again, 26, 27, we need to further enhance the capacity to keep up with the requirement.
So the new capacity that you're adding on after the money that you raised from the IPO will be 2.4 million units?
Additional 2.4 million for use in 26 and 27.
So it gets completed only in FY27.
Yes.
And if you can, operate that at full capacity, what could be the revenues, incremental revenues you'll generate?
In revenue terms, almost with a capacity of 6+ million at 50-55% capacity utilization, we could do like something like 3 million, 3.5 million, which for air condition requirement is like almost 3,500 to 4,000 crore rupees, let's say.
4,000 crores.
From air conditioner alone, yeah.
For air conditioners, this is full capacity.
Full capacity with the industry average of utilization. So we're not saying that full utilization.
Sure. With the average utilization level.
Absolutely.
Got that. You gentlemen are in a very hot sector. The market really loves this space, right? Electronics manufacturing. So just tell us more about sustainable growth patterns. Because if I look at the run rate, I mean, average last couple of years, you've been running at 40% plus. However, if I look at the first half, you did revenues of around 1,500 crores in the last year. First half revenues are around 600 crores. So I don't know, is there a seasonality to your business? Second half is usually stronger. How does it work? And can you sustain this kind of a top line run rate looking at the future?
Okay. See, first coming to the growth in the first half of the financial year. As an industry, there was kind of a flattish first half because we had a very errant summer, particularly. So the April, May, June was unseasonal rains in North India. Yeah. So there was an errant quarter one. Quarter two was kind of better. So the entire industry almost ended on a flattish. So we also were almost flattish compared to H1 of 23. So H1 24 was kind of flattish. Having said that, because almost like say, the season starts for us from December to May is the entire season wherein the manufacturing happens for us. So 70% of the country's AC get produced during these months, 70 to 80%. So this is a high season for us, and having put up almost like increased our capacity by 50%. So let's say earlier if we were making close to with 2.4 million, the capacity was 200,000 per month. Now with 3.7 million, the monthly capacity is more than 300,000, which needs to be utilized during the Jan, Feb, March and the following months.
So the second part of my question was on, I know you can't give projections and numbers, but it's a question to really understand at what level your business is. Yeah. And Mr. Bothra, maybe you want to come in as well. The market wants to know if growing at 40% every year is possible. The market also wants to know what could be a sustainable margin profile. There was 1 year, I think one or 2 years back, where your margins hit 7.5%. But you're now at you're about 6% right now. So, do you have the levers? What is it that could take you back to 7.5%? Is that visible in the near future? Mr. Bothra or Mr. Singhania, whoever.
See, this AC market is growing very substantially. And, thanks to the government that, AC was declared as a sunrise sector way back in 2021. And then after that, we are very, very grateful that, this PLI scheme was introduced by the government which has really made it very, very attractive for making investments. So now the PLI scheme is on component manufacturing, and the whole philosophy of the government is to create global champions in components so that component cost goes down.
If I could just interject, how much are you getting from PLI, like in FY23 or FY24?
Total investment we are committing is 300 crores over a period of 5 years' time. So we are on track. For last 2 years, we are on track of investments. Even we have surpassed those commitments. And instead of 5 years, we'll make the commitments completed in 4 years of time. And then when we make 300 crores of investment, government is going to incentivize us to the tune of 230 crores. This is Government of India scheme. And so with this introduction, I think the import there is no more imports. Hardly 5% of import is taking place in the country now. And the growth as projected by FNS is also doubling. So since we have a great relationship with the customers supporting us, we have 8.5 years of average relationship stickiness with the customers, and our capacity increase is there. So very hopeful that we'll continue to get good business support from our customers, existing customers, and we are catering to about 7 of the top 10 customers in the country.
AC is about 80% of your revenues. Will that number change materially in the next 3 years? And what are the new products that you're targeting?
See, one, definitely we are mindful that AC is contributing 80%. And with the seasonality, the average asset utilization gets affected during the off-peak 7 months. So being mindful of that, we are focusing heavily on developing products in the non-air conditioning segment, which can definitely give us revenue during the off-peak 7 months, as well as add to both top and bottom line. So we are developing certain mid-segment products which will utilize our assets, like let's say coolers, washing machines, etc. The mid-range products, also the small domestic appliances. So we're expanding our portfolio of small domestic appliances as well. In all, we believe that by doing this, the asset turn will increase and the asset utilization will increase.
Which brings me back to my original question, right? Yeah. Margins. This is a very competitive market, right? Absolutely. I mean, electronics, appliances, even ACs, it's a highly competitive market. So is this going to be a 6% margin business? Can it be a 7%? Can you do something different that takes it to maybe double-digit margins at some point in the future?
Yeah. So see, definitely there is a lot of room to improve, and so I mean we are in a business where continuous improvement is required. So continually we are focusing on all the levers required to improve the margins. Some of the things we've already done recently is like in 18 months we have invested a lot in backward integration. So earlier to this, our in-house value addition was close to 35%. Now we've increased it to almost 60-65%. So the last 2 rounds of private equity fundraise which we did, we invested the entire amount in increasing our capacities.
And by value addition, you mean manufacturing it yourself, backward integration?
Absolutely. So managing the components in-house. So a lot of it is actually import substitution as well. So the chip components obviously get imported, but the PCBA, the assembly part of it, we have started doing it in-house. We've started a lot of injection molded parts, cross-flow fans. So a lot of it was earlier imported.
I think Mr. Bothra also wanted to come in on the margin bit.
This is very, very important because we are ODM. We design the product. So when we design the product, we have a huge R&D setups. As on 30th September also, we had 57 R&D engineers with us who continuously innovate, do value engineering, so that that is the biggest lever for us for cost reduction and improving the margins. And over and above this, I think when our scale is going up, as we are growing last 2-3 years, the vendors are also supporting us with further cost down. So with scale going up, cost getting down, and then with value engineering, cost getting down, I think, and then this PLI scheme is coming into often, and all this will result into improvement in ROE and ROCE for us.
Do you have any targets on ROE, ROCE in mind?
See, we are working very hard, and then we know what is the industry average. I think we want to surpass the industry.
You want to surpass
it.
Okay. Gentlemen, out of time. Thank you very much for joining us in the studio, and wish you all the very best. That's Epack Durables for you. We will slip into a very short break on that note. We'll come back and talk more about the market. Stay tuned.